Let me welcome on board then Nitin Raheja and find out what he's making of the market. Nitin, hi, afternoon. Good to have you on the show. Clearly well established that we are doing nothing out of the box. We're only aligning ourselves with the global markets, Nitin. But we've fallen quite a fair bit. We've given up all of our 2022 gains. A lot of the portfolio wealth has been wiped out already in the last 10 trading sessions. Is it time yet to buy the market just yet?
You know, these markets are actually giving very misleading pictures because, when we talk about the gains of 2022, if you really sort of step back over the last 3 or 4 months, you have actually the markets have started trending in a range. And this whole phenomena actually started somewhere around September, October of last year. And every time they go up and there is a correction. Albeit, what we are seeing today is a reverse of what we saw in the last week of December and the first week of Jan, when we had a very sharp rise in the markets, and you're seeing the reverse happen. However, the markets by themselves don't really present a complete picture, because if you really look at the broader breadth of the market, it is down far more. So there is, if you ask me, it almost, I would say, 75% or 80% of the market has corrected anywhere from 10% plus, going all the way to 40-50%. So that is actually starting to present, some level of value or attraction in the number of stocks which are coming. Also, don't forget, these results also have highlighted one other thing, that is, the whole impact of inflation and its corresponding effect that we have seen in the margins of a number of so-called consumer-based companies and consumable items who have actually seen strong top-line growth, but margins having come into pressure. So I think you're seeing a mixed impact of both. Some of those companies have corrected a fair bit, but however, we continue to think that this is starting to now present very interesting opportunities for you to go. I don't think that we are back to the so-called one-way bull market. I think we will continue to remain choppy and volatile and continue trading in a range. So hence, I think bottom-up stock picking is going to play a far greater role in returns this year than they were last year.
Sure. Nitin, what's happening with IT? I mean, our heydays of low-hanging fruit kind of returns are well behind us?
Well, absolutely. I think, the heydays of the low-hanging fruits are return. I mean, the kind of valuations that I've sort of been, I used to be a tech fund manager. I've tracked IT from 2000 plus, from 2000 till now. The kind of business scenario that they've seen and the kind of re-rating that they have seen, I haven't seen in the last 20 years. So I think you've seen a huge re-rating as far as IT companies are concerned. So I do believe that they will continue to declare robust numbers, even in the near future. However, I think valuations are taking a breather, waiting to see what next. I think now returns from IT will be a function of individual stocks delivering their numbers over the next many quarters. I think the re-rating is done as far as IT is concerned.
Well, yes, Nitin, you said it will continue to be choppy, and choppy it has been for the Indian markets. The Nifty almost went to the level of 17,100 just a few minutes ago. It's made a tad bit of pullback, now sitting at 17,150, but considerably off the day's high. And that has been the banking space which is actually leading to this downtick, because yesterday we had seen the reversal of what we are seeing today. Yesterday it was the banks which were holding one end of the market and taking it higher. Today it is the banking space which is actually dragging it slower. The Nifty Bank currently sitting with a cut of around 200 points, and it's almost 800 points off the day's high. It's names like RBL Bank, Bandhan Bank, ICICI Bank, Axis Bank, HDFC. they're all sitting towards the lower end or lower end of the trading session. And even SBI, for that matter, whatever gains we had seen yesterday, is seeing a tad bit of pullback. Neeraj, coming in as far as the banking space is concerned, at the end of last year we were talking about how money is moving away from tech into the banking space, but again there is this tad bit of pullback from the highs that we are seeing from the banking names. The performance and the numbers from Kotak Mahindra Bank today were good. Axis reported a good set of numbers. What is your expectation as far as the banking space is concerned?
Is that for me?
Neeraj, yes.
Sorry, that is Nitin. I think you
Nitin.
mentioned it's, but yeah.
Yeah.
So, we are very positive on the financial sector. I think taking a little bit of a broader view, the financial sector has gone through a lot of pain from 2018 post the RLFS crisis, and we've seen a lot of mid-tier and third-tier banks coming into problem. I think that then we got hit by COVID. So I think that after 3 or 4 years of consolidation and pain, I think the financial sector should start doing well as the economy is showing clearly signs of pickup, and we've seen the initial signs of credit growth pickup. However, I think this is going to be a sector where the large players are actually going to get even more dominant, and they're going to, in the last few years, they've gone and raised substantial capital. They have been able to attract deposits at very competitive rates, which means that the first tier buyer, borrowers will actually be with the top banks, and then the second tier banks will be following through with slightly riskier borrowers and so on and so forth. So we think that this is the whole consolidation theme is playing out as far as the financial sector is concerned. We're very positive on banks. Technically, we think because they are, institutional or FPIs are large investors in the financial sector. We are seeing this pressure in the last 6 months on the sector as they have been, net sellers. However, we think that this is actually presenting an opportunity, and there is a tremendous value as far as financials is concerned.